Mic check, 1 2 1 2. Let the good times roll. All right, 12 o'clock. Let's do it. First disclosure here, I'm an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. All right, I got positions on. I'm feeling pretty light. I got shorts on, really with the TZA, so that's a position that's basically short the market because it's an inverse ETF. I got UVIXI on right now, which is also a bearish bet on the market, and all my other positions are actual long positions. So I've got a little bit of diversity going on with my positions. We'll talk about that in a little bit. About me, I think everyone knows me, but I'm Derrick Oldensmith, senior trader and registered principal at T3 Trading Group. I've been with T3 Trading Group since 2011. I was at T3 Capital before that. I've mentored well over 100 professional traders for the firm. I'm currently managing a group definitely in excess of 50. Love trading, love markets, love working with people, love teaching people, and that's what I do. If you want to get in touch with me, if you want to talk about markets, if you want to talk about professional prop trading at T3, if you want to talk about retail trading accounts at T3 and why they are better than most of the other online brokers that are out there, reach out to me. That's my email address. So what I really want to talk about is charts. Let's talk about the charts. I'm frustrated. That's really what I want to talk about. I want to talk to you guys about why I'm frustrated. So I've been trading for, professionally for 10 years now. And trading is not always sunshine and roses. It's not always easy. I tend to trade best when I have a thesis for the market that's being confirmed by technicals. And I was able to capture some excellent moves here when I had some strong theses on the market to the upside initially. Then we did really well here to the short side. And then there's just been this big time correction. I actually thought that this pull-in was going to be deeper than it was. It wasn't. We corrected mainly through time. And now the technicals are so bullish on this market, and it has me completely frustrated. It's got me completely frustrated because I'm more or less on the sidelines right now. Last couple weeks, I've been trading less than I typically do. My positions, I think, are lighter than they typically are. I've got longs on in some individual names. I've got some shorts on for the market. And I don't know why I got shorts on for the market. Look at it. NASDAQ. All-time highs again today. Every day, it seems like. All-time highs. Last month was an incredible month because everything went up. It didn't matter what you had. You could have the metals. You could have gold, silver. You could have treasuries. You could have the indexes. Everything went up except the dollar last month. And the technicals are so bullish. We are above resistance. We broke out and we've consolidated above resistance. It's tremendously bullish. That's the S&P. We can look at the IWM, which has been weaker. The IWM broke above that 145 resistance and has also been consolidating above it. It's bullish. You can look at the NASDAQ. The NASDAQ's at all-time highs. Did anybody see earnings last week from Apple, Facebook, Amazon, Google, AMD? The earnings are out of this world. Apple's numbers were out of this world, and the NASDAQ is just in this incredible trend. So why am I so frustrated? Because, like I said earlier, I tend to make the most amount of money when I have a thesis for the market and the technicals line up with that thesis. And it's so hard to have a bullish thesis with this market. There's two big things that everyone points to. Stimulus, and that there's a lot of cash on the sidelines, that institutions are light in the equity market right now. That's what everyone points to as what's bullish. But you can tell me every bearish story that's out there, and there's a lot of them. And guess what? The market doesn't care. Oh, China-U.S. relations have gone to hell in a handbasket? The market doesn't care. Market used to go down when China-U.S. relations would sour. Now, market doesn't care. Oh, there's a tremendous amount of people who are unemployed. You know, the market is basically back to where it was last January and February, but I got an extra 14 million people or something like that who don't have jobs. The market doesn't care. Oh, the U.S. government's a mess. Democrats and Republicans can't get together. They can't come up with the next bill to help people during a pandemic. Oh, let's forget about the pandemic for a second. So government can't come together, can't put things together. The market doesn't care. The market doesn't care about anything. Virus rates go up, virus rates go down, deaths go up, deaths go down. The market doesn't care. So you can point to all of this stuff, and you can talk to me about why it should mean that the market's going to go down. Well, guess what? Look at the market. It's not going down. So, you know, if you are trying to be short, that's a complete fool's game to be right now. The shorts I have right now are for my own peace of mind, and I'm paying a price for that peace of mind. Luckily, I'm flexible enough to recognize how bullish the technicals are, so I'm not 100% net short right now, hoping and praying and begging and pleading that this market actually goes down like it quote-unquote should. Because should doesn't matter. The technicals are so bullish, and that's what actually matters. The way this market trades right now, bad news comes out, we go down for 5 minutes. Good news comes out like a rocket ship. The market didn't even downtick for 5 minutes when the unemployment benefits ran out for however many millions of people it is who are now no longer, making the same amount from the unemployment benefits as when they were working. The market didn't even downtick for like 5 minutes on it. But I can almost guarantee that if we flip the other way and we get things done, that the market will probably rip on that. That's the MO of this market, and that's how bull markets work. Until they don't. Until they don't. At some point, I don't know when that's going to be. Today, tomorrow, next week, next year. At some point, negative news will start to matter. At some point, the technicals will show you that you can be responsibly short, but right now, that's not it. We are at highs. And if you've been trying to short any of this consolidation, guess what? You're losing money. It's not working. So you can take whatever bearish thesis that you have for the market and just put it, I'm not saying throw it in the garbage, but I'm saying put it in the back of your brain. Because if the technicals aren't confirming your bearish thesis, you have no trade. What's difficult for me right now, and again, I've been doing this for a while, I make the most amount of money when my thesis lines up with the technicals, is that I see all this stuff. It's hard to turn it off. And all it means for me is, like these technicals, they tell me I should be going gung-ho to the long side. And I just can't get myself to do it, which means I'm missing out on making money on some of these up moves. Sure, I'm taking my day trades. The day trades have been great. The bullish option flow that was flowing through the market today, that we were getting into the ProDesk VTF, was insane. It was just one name, AMD. Anybody see AMD today? Oh my God, look at this move. We talked about this in the morning meeting today. 2 inside days in a row. ADMA is catching up to this base of the price action here. I think just a week ago, my team and I bought the breakout at $58 here. I have no position anymore in AMD. I was like, oh, this move is too crazy, and I exited my position. And now look at it, 84. Why did I sell? Because I have in the back of my brain some of these bearish theses. I'm saying to myself, oh, look, it's gone up too fast. Well, guess what? When you're dealing with momentum, there's no such thing as up too fast. A market can remain irrational for longer than you can remain solvent. While the technicals are bullish, that's the side of the market you want to be on. This AMD was incredible. The bullish option flow started getting posted into the VTF room very early in the day. All you had to do was press the buy button. All you had to do was press the buy button. Put your stop at the low of the volume bar in case it doesn't work, but it seems like all longs work in this market environment. So it's almost like, I preach to my traders, risk management, risk management, risk management's the key to this business. Risk management sounds like a waste of money to me. Just buy the stock, go for a walk. If you're not in the money right away, you'll probably be in the money soon. That's how this market feels. And that's what's so frustrating to me about it as a professional trader. I understand these concepts of risk management. I understand these concepts of extension in the marketplace. I understand that, I need to press things when I feel like I have a legitimate setup and a legitimate advantage. And then I should take a step back when I don't. And that's exactly what I've done. I don't feel like I have a legitimate advantage in this market right now. So I've been taking a step back for the last couple of weeks. And guess what? All that's happened is I've not made money because I've taken that step back. Because the opportunities are there. Whether it's day trading opportunities, that I've still been involved in, but I've been a little bit more cautious on that. The swing trading opportunities are still there. I haven't been making the money there in the same way because, I've been being a little bit more neutral on this market environment recently just because it feels so bubbly to me. The option flow that we saw piling into the market today felt so bubbly to me. Everything's at all-time highs, and it seems like the world around me is falling apart, right? That's the difficulty sometimes of a trader. And look, I've been doing this for a long time. You adjust to the market environment. You have to adapt. That's one of the keys to the business. You have to adapt to whatever that new normal is. And even if the market feels irrational to me, it doesn't mean that I can't make money by being part of that irrationality, if that's even a word. Go with the momentum. Go with the trend. That's always been the key to success. And if you're overthinking it, like honestly I've been doing for the last couple weeks, it's just going to be holding back profitability. And again, I'm not saying don't do your fundamental research. I'm not saying don't abandon that stuff. But look at the tech bubble in the United States in the late 90s. It went for probably 2 to 3 years longer than it quote unquote should have. Whatever that means. And if you were too smart to participate in the long side of the market in 97, 98, 99, well, guess what? You left a lot of money on the table. So I have a thesis in my brain. The technicals are not confirming that thesis. Go with the technicals. Eventually the technicals may confirm my thesis, and then I'll be able to size back up again. But until then, that's just the current state of this market environment. And it is what it is. It's frustrating. It seems like every time one part of the market takes a pause, money just starts flowing in somewhere else. Whenever it looks like, even on intraday charts, looks like the NASDAQ's pulling back a little bit right now. Even on intraday charts, like the NASDAQ takes a little break here. This is 11:20. What did the IWM do at 11:20? IWM at 11:20 pulled back a little bit later. IWM at 11:20 made new highs on the day, as the NASDAQ, which has been today's been a very tight day, pulled back at the same time. So it just seems like whenever somewhere actually takes a break, new money just flows right into something else. And that just goes back to what I said last month. Everything was higher last month. It almost doesn't matter what you own as long as you didn't own the dollar, you made money last month. Metals, indexes, treasuries, everything. It can't last forever. The pace of the increase can't last forever. Think about this for a second. Let's look at the SPYs. March bottom was about 220. It was actually 218. Today, our high is basically 230. So the SPYs have basically gone $110 off that 220 low in 4.5 months. What are we in, August? Let's just say in a hypothetical world, the market maintained that rate of increase for the next 4.5 months. So that'd be what? August, September, October, November, into December. That would mean that by the end of the year, in a hypothetical world that the market keeps its current pace up, and I'm not predicting this in any way, we would have a 100% move in the S&P from the March bottom by the end of the year. Am I the only person that thinks that's nuts? But guess what? Don't overthink it. Just don't overthink it. Let the technicals tell you what the right thing to do is. The technicals will tell us the right time to size up on those shorts if there is a right time. And right now they're not doing it. Right now the technicals say to be long. We had a very small gap down in the market this morning. I said to my team, guys, it's a gap down in a bullish market. What you want to do is you want to buy the open. The same way I told people to be patient yesterday. Because yesterday was a gap up in a bull market. A gap up in a bull market doesn't mean go short. A gap up in a bull market means be patient on your longs. So if you waited for 30 minutes yesterday morning, that ADMA caught up to the base of price action. This, by the way, is a bull flag with the gap itself being the flag pole. So if you waited that half hour, let the market correct through time, ADMA catches up, then you put your longs on. Guess what? That's the low of the day in the SPYs. Today, gap down. A common gap down in a bull market is something where you want to be more aggressive right away. Guess what? That's the low of the day. If you bought right off the open into that gap down, you're, at least as of right now, you're in from the low of the day. So let's see how the market closes today. It's been a really tight trading session. Yesterday's also been a really tight trading session. I can't finish this meeting because this is supposed to be an update on markets without talking about big tech. So tech has had such an incredible run into their earnings report. This is what we've been talking about, and it's held up very well. What I was telling my team coming into the big tech earnings is these companies can't just beat their expectations. They can't just provide a good earnings report. A good earnings report is not going to be good enough because of the degree of which they ran into that earnings report, and that is really important. If a company's been really beat up into earnings and they're able to just meet expectations, a lot of times the market will love that. And you could really see the market rip higher. The opposite's also true. When you see this huge run, everybody's got big expectations into earnings reports, and they only just meet those expectations or beat by a little bit, very often they end up selling those stocks. So what you needed from tech into these earnings reports was spectacular earnings reports. Otherwise, look what happened, right? Netflix reported pretty good numbers when they reported. They sold it off. Microsoft numbers were good. They sold it off. Tesla numbers were good. They sold it off. But Tesla had ran 70% basically into that earnings report. And then they reported good numbers. And good is not good enough, and they sold off. But now let me show you some companies that reported absolutely incredible numbers. Some of these tech companies posted maybe the best earnings report numbers I've ever seen over the course of my entire career. AMD had a big run into its earnings report. And now look at it. Its numbers were stellar. Lisa Su is an amazing CEO. She's doing right by this company. It doesn't matter that the end of the world coronavirus is here for AMD. It doesn't matter that they had a run into their earnings report. Look at it now. Apple. Oh my God. The Apple earnings report was insanely good. Insanely good. They beat everything. I think I read that they beat by a larger margin than they've ever beaten any earnings report in the history of the company. And they announced a 4-for-1 stock split. It doesn't get any more bullish than all that hitting all at once. And guess what? It didn't matter that it had a huge run because the earnings report was that good. Now, here's an interesting one. Amazon, because Amazon's numbers were also amazing. And one of the things, again, that's been a little bit frustrating about this market as a whole, I really thought that if they sold off, like Facebook, Amazon, and Apple, their numbers were excellent. Google's numbers were only good, right? Here's what happens when you only report good numbers. You go down if you're a tech company into an earnings report. But you post excellent numbers, you get an Apple, you get an AMD, Facebook here, which is starting to roll into its gap a little bit as we're chatting. Those were excellent numbers. So I really thought, I was like, if they can just sell one or two of these names to fill their gap between Apple, Amazon, and Facebook at that level of stellar earnings, then maybe some of those bearish theses that I'm talking about will actually come to play and it could actually bring this market down. No, wrong. Amazon has basically fully filled its gap. Facebook has honestly been really heavy. I've taken some, I have no position in Facebook right now, but I've shorted it with mixed success. Some good trades, some kind of break-even trades, couple little losers on day trades in Facebook since the earnings report. And now that idea of breaking below 250 that I had for my team in the morning meeting is actually starting to work out here a little bit for the short side. I really thought that if they were able to fill the gap in any of those three companies, they would be really bearish for this entire market. And once again, has not happened. They sell off something, they take a pause in something, and the money just rotates to somewhere else. So that's the current environment that we're in. And it feels to me like a bubble. It feels to me completely frothy. The bullish option flow I saw piling into the market this morning seemed incredible. But if this is like the tech bubble in the 90s, I can't tell you if we're right at the top, if it's year 2000 or if it's 1997. And markets can remain irrational for longer than anyone can remain solvent, and I know that. So I'm not really going to allow myself to fight the bullish technicals of this market, even if I'm not good enough of a trader to fully fight my thesis and completely ignore it and be 100% to the long side. when I feel like I don't have an advantage from a money management perspective, what I got to do is I got to take a half step back. Reassess. Do more research. Maybe I need to reassess my thesis. But right now, the technicals are so bullish, and if that changes, then I'll be ready to pounce on the short side, but it's just not there. It's just not there right now. And it's basically that. I mean, look at gold. This gold move is still going. Oh, man. This JNUG trade that I had earlier this year is one of the best trades of my career. And I've been out of it for a little while right now. Silver. They got rid of that USLV silver ETF. I caught about 100% move in that USLV ETF. I was buying silver, but SLV and USLV, I think it was on this day. I would have to double check myself on that. I think it was on this day, on June 15th. And I think I was just using an out of approximately one of these lows in here, 1550. And I caught this great move. And I think I sold into that move somewhere on here. Again, defying really my own rules in some ways of trailing. That's what I've always talked about forever to my team. When you're with the trend, trail, because you never know how big of a move it can provide to you. And I did that for a while. And then I got out of GDX, JNUG, SLV, and USLV, and they're still going. And again, this looks insane to me. We saw silver bullish option flow hit at guess what time? 10:35. It's amazing how this is an interesting candle right here, actually. This is a potential king-queen reversal here on the 5 minute of silver right now as we're having this conversation. But it's amazing how when we see that option flow come in, how the market really follows through sometimes after. But at a certain point, it becomes a little bit too much, and it just felt crazy to me how much bullish option flow is piling into the market this morning in a lot of individual names. And we're seeing stocks like this JMI go up 40% yesterday. You're seeing stocks like this Kodak go from $2 to $60. Can't look, my chart doesn't even go that high. Can I get to the top? There it is. Sort of. Still not there. $2 to $60. On what? A $750 million loan from the government? I mean, it's just... Look, I was not a professional trader in the 90s. I didn't see it. I just know the stories. But I can tell you that I've never seen anything like this in my trading career. I never saw anything trade like I saw Kodak trade on that day when it went to 60. It would have volatility. It would be open for 5 seconds and then have a volatility halt. I've never seen shell companies, which I understand historically, that when shell companies become really popular, it's usually a sign of a bubble, like a market type bubble. And we're seeing these shell companies come left and right and just rip and go. But again, like I keep saying, the market can remain irrational for longer than you can remain solvent. If this is tech bubble-esque, I can't tell you if it's 97 or 99 or 2000. I'm not good enough to be able to do that, and I don't think anybody is. All I can tell you is that right now, the technicals of this market are really bullish, and we know from an understanding of flow that there's a lot of firepower that's still out there that could really bring this market even significantly higher. And I can tell you that we are consistently seeing new bad news hit the market, and the market has zero reaction to it. But new good news hit the market, and the market really go higher on it. And again, all of those it's all classic signs of late stage bull markets. But that's relevant. And this environment is unique to any other environment that we've ever seen. And that's basically how I'll leave it off with you guys. I'm going to continue to tell my team that until the technicals change, we should be aggressively buying gap downs, and we should be patient on longs and market gap ups. And that's what's paying. And personally, probably better to focus more on day trading. If my thesis and the bigger picture technicals are not lining up, then I can just pick my spots and try to make some cash flow for myself. And that's it. That's it for this week's market update, guys. So let's hop back over to the slides here. Let's talk about prop trading with T3. Look, there is no perfect trader. I've been in this business for a long time now, and if you ever meet somebody, some trading quote-unquote guru, who tells you that all they've ever known is sunshine and rainbows in the markets and trading, that person's a liar. One of the reasons why I feel like I'm actually good at teaching traders is because I have made so many mistakes over the course of my career, and I've been able to learn from them well enough to still be able to be here to talk to you guys today. And we put a lot of work, I put a lot of work into the traders that I work with on a day-by-day basis. T3 is one of the largest proprietary trading firms in the country. We've got over 500 licensed accounts. We've got offices throughout the United States, mainly the East Coast. Our headquarters is in Manhattan. I'm personally in Wyoming right now because the office is closed. I've been working and trading from here. We've got remote traders all throughout the United States. T3 Trading Group is an SEC registered broker-dealer and member of FINRA SIPC. That means that all of our pros have to be licensed. You have to pass an SIE, Security Industry Essentials examination, and the Series 57. You also have to do a background check in order to join the company. We would sponsor you to take those tests. We provide you with study material. We sign all of our incoming traders up for an STC study program, textbook, online classes, online practice tests, etc. After you pass those tests, we have 3 different softwares available for our professional traders: Lightspeed, Sterling Trader Pro, and Wolverine or WEX. Personally, I use Lightspeed. We have retail trading accounts available as well. On the retail side, the only software option available is Sterling Trader Pro. It's a very robust platform. On the prop side, again, we have equities. We have equity options. We have futures. I think we also have options on futures. So we have these different places you can go to. Our training and development is really primarily equities focused. Myself, I am purely an equities trader. I've never traded a futures contract in my life, which doesn't mean that I'm not open to it. But man, I'll trade pre-market and post-market, and it's a lot of work even to begin with. A 24-hour market, I think, might make me a little crazier than I already am. Like I was saying earlier, we pride ourselves, I pride myself on really working with traders. The number one goal at T3 Trading Group is to create success from our traders. I tell people I don't push volume, I push success. I want to see the successful P&Ls coming in. And I want to help you and work with you to make you as successful as possible. And again, I am by no means a perfect trader. I make mistakes. I have losing trades all the time. What separates the successful traders from the ones who are not successful, in my opinion, is really how they manage those losers. Because everyone's got losing trades. We work in probabilities. Even if you do all the right things, sometimes you're going to have down days and down trades. And what you do with those down days and down trades, that's what makes a difference. You'd be required to fund your account. So you have to commit a capital contribution. It's going to go to back your risk. Typically, we start by providing buying power 20 times for day trading and 8 times for overnight, and then traders are compensated through a profit split. These numbers can vary a little bit depending upon the specifics of the deal that you're coming into, with the company and the size of your contribution. Again, all the education that I provide is free. I have a training program that I've developed for my traders. There's a morning meeting every day at 9 a.m. Eastern. There's an afternoon meeting every day at 10 after 4. So again, reach out to me. Here's my email address, doldensmith@t3trading.com. If you're interested in becoming a professional trader, if you're interested in opening up a retail account or learning the advantages of T3 Trading Group retail accounts, reach out to me. Again, even if you just want to talk markets, this is what I do. I work a lot of hours because I want to. Because even though I can be a little frustrated sometimes, like maybe I am today, I love what I do. And because I love what I do, it enables me to work very, very hard at it. And then that in turn helps me to become more successful than I probably would be otherwise. You're also going to get some free access to the Red Dog, Scott Redler. Chief Strategic Officer for T3 Live. You get access to my VTF room, you get access to his VTF room, you get access to the regular All Access newsletter just by opening an account with us. So reach out. Again, here's my email address. And I think that's going to cover it for today. So again, if anybody ever has any questions during any of these webinars, you're always welcome to pump them into the chat here on the YouTube. I'm able to see it. But if there are no questions, then I'm happy to jump back to helping my team and jump back to managing my own trades and seeing how this market continues to evolve. I love it just as an intellectual curiosity a lot of times. What is this market going to do? Forget about the money for a second. Can this market continue? What would it look like if this market reverses? I'm still learning new things. Learning about dealer gamma has been a recent thing that I've been learning about. Understanding how market makers operate and how they potentially affect the market and increase and decrease volatility. So even though I've been doing this for a decade now, I'm still finding new places to learn. And you know what? Experienced traders always told me from the very beginning of my career, if you ever feel like you're no longer learning, be careful because you're probably 1 foot out the door. Because this market marketplaces require you to constantly learn, constantly evolve, constantly adapt, adjust your trading style, adjust your risk management approach. And, that's what I love. I love all that work. For me, it's not unusual for me on a Friday night if nothing else is going on, I might find myself on an Excel spreadsheet with a beer and I'm just playing with numbers and playing with game plans and brainstorming on what I could do with the marketplace. That's what I enjoy doing. So if that's what you enjoy doing, reach out to me. All right, everybody. See you next week.